Joseph Barbuto. Really a pleasure to meet you. Thank you for granting an interview and coming in to talk about the long E-wave with us.
Yeah, thank you. Can you hear me all right?
Got you, Joseph. Yeah,
Good, good.
good. So did you bring any visuals of your work or you
Oh,
just wanted to talk?
well, I think it's a talk. And listen, if they like what I have to say, we could always follow up in the future. And I'm still getting acquainted with Zoom. I don't use it that often. So,
Okay, because
but
there is a
yeah,
screen
let me
share
just,
function.
oh, yeah,
There,
yeah,
there is a screen share function in Zoom. So, I'm a believer that a picture speaks 1,000 words, but we could
um,
we could just move around and talk about different things. Why don't we start
sure.
with why don't you tell, I read a bit about what your story is, and
Yeah,
it sounds familiar to the story that Luke Roman had. May have been a different time period, but it involved having bad timing buying real estate. And that drove you to saying, I need to make better decisions. I have to know about cycles and when's an opportune time to do it and when's a good time to sell. So,
yeah.
how did you come across the K wave?
Oh, this by accident. So let me do it, articulate my history because I think it really puts a framework in how I think and view things differently. So it really, my story starts in '89. My well, I proposed to my wife at the time, of course, on Valentine's Day. I remember the date, February 14th, Tuesday, and the real estate markets were hot in Toronto, so we bought a from Toronto, Ontario, Canada, and that weekend, that Sunday, we bought a condo, and unknowingly, I bought right at the top, and we had a really bad bear market for 4 years. At the same time, I also started the investment business in '89, and when I started the investment business, I learned very quickly that they wanted me to decide as I built up my client base how to allocate the assets. Well, I said I have no idea what am I going to do. So I just learned from the best, and at the best were John Templeton, Peter Cundall, and Charles Brandeis, and these were the greatest value managers of the day, and this was the early '90s. So my first 10 years was really managing private wealth through a value approach, and I got the opportunity to meet John Templeton and Peter Cundall, and I just picked their brains. I mean, how do I decide what to allocate for clients? And I love Templeton's approach. Buy low, sell high. Didn't know what that really meant at the time, but I was buying things out of favor, and whatever was hot, I was switching out of those accounts. And I got into trouble with compliance. You're actively moving the accounts. I said, well, twice a year is not active trading, but I did extremely well for clients, and they were happy. Then I fell into the long wave when Harry Dent came out with his book, The Great Boom Ahead. And it was kind of my first introduction of the.
That was his first and last good book.
Yeah. Well, I'm gonna. It
You
is
still read? Yeah, let me ask you something. You still read his stuff, and did it have influence in keeping you bearish the last 10 years?
No.
Because he has been.
He's been very bearish, but
10 years.
Yeah, for a long
10
time,
years.
and yes, for a very long time. But there was it was an introduction to the long wave.
Okay.
And
demographically, I mean, he was a big demographics guy.
Well, demographics is important, but it's not the only thing.
Okay. Well, I think most people are familiar with Kondratiev.
Yes.
And it's a 70-year cycle, right? Or
yes,
it can stretch.
There's no exact time frame. And
actually, where are we? Isn't it winter?
Fall. We're in economic fall. Actually, and I'm looking
Fall.
at, yeah, fall. There's 4 seasons. I just posted. Interesting enough, my website was launched today. So I'm a big picture guy. And if you go to my Twitter feed, you can see the link to my website. It's economiclongwave.com.
Okay. Yeah, I pulled it up here, Joseph. So
Thank you.
so I can make a nice commercial for you.
So
And give me your
thank
address
you.
and I'll send you the bill. All right, go ahead, buddy. There's
Yes.
Joseph, handsome guy. Marcus haven't really, aged you. Yeah, you're weathering the being a trader pretty good, buddy.
Well, the difference is though, and let me
Yeah,
explain
you're
so
not a
you
trader.
can understand where I'm different.
Yeah.
In the 90s, as the internet revolution was starting, I stumbled onto a long waves forum because I was hearing this man called Richard Russell. I'm sure everybody
I
knows
know,
who he is.
sure. Yeah, La Jolla.
Yeah, and so I found the Dow theory fascinating. I found the long wave it in my mind, it made sense of the world. I thought it was a chaotic thing that just grew linear. But the more I learned, but the
You're breaking up on me a little bit.
many interpretations, and on the long ways forum were hedge fund managers, money managers, writers, traders, brilliant minds all over the world. I was just absorbing stuff because I'm just a curious guy by nature. And I started making pretty good predictions, but this is my first folly. So here's my second mistake, financial mistake. I went bearish in 1998 in the markets, and I was pulling clients out. And remember, I'm a mutual fund advisor, personal wealth, so I was allocating assets. And I got a call from the compliance office, and they said, "What are you doing?" I said, "I'm moving everybody out of the market. We're going to have a collapse here." This is 1998.
Yeah.
He said, "Okay, come in," and went in to see him. And he closed the door. I thought, well, I'm going to get fired here. And he said, "Look, I agree with you, but you know
Keep
what?
your clients happy, and they're missing everything, and
they're missing everything."
and they're pissed.
But he said, "Get it signed," because at the time I didn't have to sign the trades. And long story short, he's an actually Elliott Wave fan, and he introduced me to Elliott Waves, and I found that fascinating. Well, it was a tough 2 years. Eventually, I was right in 2000.
Do you think, does it have any similarity to what probably a lot of investment advisors after COVID and the Fed raising rates are underinvested, and their clients are saying the market's going without me? Is this a similar time frame? Does it feel like to you?
Okay, from the Canadian perspective, what I do is the markets are bearish. And interesting, the models that I have, it's bullish on the US markets. And this service, whatever. So I'm more of a long-term, not a day trader, right? So I'm just going to tell you.
Well, then tell us what your long-term outlook is then.
Well, I'll say is I'm looking for economic winter to appear post 2024.
Post. Okay.
Yeah, because
All right.
we even have China turning down, Europe is turning down, US turn, so is Canada. So there's
What about Europe?
Europe, yes, Europe is turning down. Interest rates are rising. Real estate has peaked. New housing construction is slowing. I mean, these are precursors to a hard landing. They're not appearing yet, but that'll start appearing this fall and next year.
Okay, next year. I think Gann has 24 as a negative year. So how do you position yourself in the fall and prepare for the winter?
Well, what I combined is in the 2000s, I learned technical analysis and money flows. And I learned from Martin Pring, because Martin Pring has the only active I'm aware of long wave model. And it's a phenomenal book. It's actually on my list of resources. So if you want to look at books that I've read and used, I said, hey, why don't I make a Canadian version? So I did. And his track record is phenomenal. And it's more for wealth management, right? Protecting your assets. So since I'm not a trader, I'm just riding the business cycle.
How do you ride a business cycle? Do you just sit in cash?
Right now I'm 50% cash. Yeah, 50%
Where's the other 50?
30. Well, I have 30% inverse.
Joseph, I feel like a dentist right now. Okay.
Why?
Because, I'm trying to extract some things that, people could plug into their narrative, because we're investors too. We're not just day traders. We invest too. So I brought you here to share what the long E wave is saying to you now, and how we can prepare based upon your work
Okay.
in the markets. And I feel like you're really not willing to go there with me. If you're not, and you want to keep changing the subject, that's fine. It could be fluff. But, to me, time is more important than money. Okay. So, I want people to be edified. They can watch an infomercial anywhere. I want to know what the E wave is saying right now, because if we're
Okay.
close to winter, people should prepare for winter. And
Well, what I
you,
have,
yeah,
yeah, I'll tell you what I have. So
go ahead.
that's what you want. Sure. Right
Sure.
now, 50% cash, 30% inverse in the TSX and also banks, and a large holding gold and silver.
Okay.
Max. That's my best trade when Richard Russell, I remember in 99, 98, he said to buy gold and start accumulating. And I started actually at the bottom. And when I left the investment business in 2012, I said to clients, hold on to that and keep increasing your positions. And in Canadian dollars, it just hit a new high. So I'm overweight in gold,
Okay.
in
Looking good.
cash,
Mhm.
and that could change in September. The model could switch back into the markets, but that's for this year as of today.
Okay. All right. Appreciate that. And so the way to, and in winter, don't you think those positions that you have will be even more validated than they are in the fall?
Well, economic winter will favor traders because of the volatility that's going to come. And I will trade the business cycle, the 3 to 5 year business cycle. So at the bottom, I'll be deploying assets, right? It's what Templeton taught me. So right now, market's overvalued. We're going into a recession, maybe a hard landing. And so I want to have a lot of cash. In the day, Templeton, um, Peter Kondo would hold 50% cash in their funds. That was the norm back then, which is almost
Right.
unheard of today. So
Unheard of.
that 50% cash can be deployed this fall if the markets provide assets cheap enough.
Okay.
Templeton always emphasized never overpaying for an asset. Never.
So it sounds to me like you're expecting at the minimum a correction in the fall.
Yes, there. If you scroll, the All Season Investor, that's a book that I've just emulated for building a Canadian model, and it's just allocating where we are in the business cycle. So of course, as the business cycle ages, you start taking some profits, and
Okay.
you start increasing the cash position. And then, of course, when you get a downturn and you get all the signals that the markets, all the sellers completed selling, you're the buyer at the bottom, doing the opposite, but using technical analysis, value investing, the business cycle, the long wave, and most importantly, the real estate cycle is the most important lead and indicator, which a lot of people aren't aware of.
Okay. Well, let's talk about this a little bit, because that was one of the areas that the Fed was targeting.
Right.
Okay. Even Powell told a millennial, don't buy now. I would wait. So that was at the beginning of the campaign. And now we're in a pause, and real estate values actually are appreciating. Only this time, instead of being able to get a 3% mortgage, it's a 7. And
Yep.
it's really a housing stock situation that's keeping the market up. How do you solve a housing shortage with higher interest rates? Do you think that it's a mistake? And do you think real estate eventually will crater and be as bad as 08?
Are you aware of the real estate cycle, the 18-year real estate cycle, or the
No,
Cousins cycle?
no,
Yes.
no.
Oh, yeah, it's part of the model. If you, I'd love to bring that on. We could talk about it next time. But the real estate cycle, you can Google it and inform yourself. And it's 18 to 25 years, and it follows a clock pattern. And if you look at that clock pattern, we're at about the 18th hour, where the sentiment is still bullish, but
Yeah,
prices are now falling. Even in the U.S., I think the Case-Shiller prices are falling. So, and with rising interest rates, I mean, that's negative for real estate. So it's, and real estate and the financial cycle are turning down, which is also warning us that things will start to unravel over the next year and a half. So I'm very bearish on real estate in the developed world, because if you look at building permits and all that, that's rolled over. But there's a great book. If you want to be a successful, and I wish I had access to this book, it's 18-year, I think, real estate cycle. I should put it up there, but it's warning about real estate. And
okay,
here's why I'm worried for the US. Last time they were able to bail out the banks, and it will be an issue. Can you bail out the banks and the economy now? This bubble is larger in the US than it was in 2007 in terms of values, but we don't have an interest rate cushion. This cycle was the first time in history that society is leveraged from the zero bound. That's never happened in history. There's no
right.
recorded, bubbles have always burst around 6%, and there was a deleveraging. We've never really had a deleveraging. So that's what I'm looking for.
Okay.
And it
So you,
appears,
so you
yeah,
know, people in their homes now, there would have to be massive unemployment because they can't live cheaper than their 3% mortgage. They're trapped there. There's
right.
nowhere to go. They can't rent cheaper. They can't buy cheaper. The only thing that would make them put their house on the market would be a foreclosure, right?
Right. And how many Americans, I think, lost 10 million homes in the crisis? So, and this one is more concerning because of the level of leverage. There's a great book I just finished, The Price of Interest, by Edward Chancellor. He wrote another excellent book, The Real Story of Interest, sorry. The
Okay.
Price of Time, The Real Story of Interest. Unbelievable book, and kind of terrifying to think what kind of model do you, when society leveraged from zero, because my experience from 89 to 94, what saved me from bankruptcy, even though my condo collapsed 50%, is interest rates fell. So I
Right.
was able to carry the mortgage until I paid it off. How do we soften the blow for Americans, Canadians, those in the UK and Australia, as this massive real estate bubble around the world unravels? I don't know. This is new territory.
Okay. Do you think that we're in a bubble in equities right now? Look at this parabolic move that we've had in S&Ps and NASDAQ. Or the bubble in
I'm
the
the
fall, the
believer.
bubble could keep growing until we enter winter.
I am the one that believes that the bigger bubbles in the bond,
Okay. Okay. So you're looking for sovereign
that
debt
capital is
crises.
not getting adequate return, and so it's going
Yeah.
into equities.
Okay. All right. And it looks like they may not be they'll be getting less adequate return because the bonds look constructive for a bear market rally to me. I think maybe that's why the Fed took a pause so his buddies could lighten up on duration, have their portfolios look a little better. So yeah, this was I've never seen this in my career. I've been around, I think probably around the same time as you've been around. So there's still bearish bonds more than stocks. here,
Yeah, I'm
right?
much more. I have no allocation to bonds, zero.
Okay. Okay. And what about the miners? If you're a gold guy, you probably have played around in the miners. Can you explain why we had, like, maybe we'll have a good day today, but a pretty good day, and silver's been acting okay. And then you look at the miners, like here's a SILJ, it's the juniors, it's an ETF, or we could even go to GDX, and it doesn't look great compared to what gold and silver did yesterday. Why are the miners lagging, and were you taught that the miners should lead?
Oh,
Tough
there's
one?
yeah, that's a tough one. What I understand, because why there's a bull market and gold and almost all currencies now, and I can't in Canada, Canadian dollar terms, they hit a new high, but it's not falling with the miner. I believe that you're going to get that breakout when the economy and the cost for miners falls, and that's a hard landing, and gold prices stay up. And that difference is going to help the bottom line of gold and silver miners, which will propel the bull market. So I'd be adding to positions, and that's just a long-term thing. I've
Okay.
agreed in principle. What I've learned from Mitchell Russell was that the danger is the currency into the futures. Governments are going to continue to print and prop up, and they need inflation. So that's how I see it.
Okay, so which currency are you more bearish, the dollar or the euro? They're
Oh,
both
definitely.
fiat. You're more bearish euro?
Yes, definitely. I mean, the U.S. will be the last, currency standing. So I'm still
Okay,
bullish with the U.S.
interesting.
dollar.
Okay, so I've heard people like Martin Armstrong say that the sovereign debt crisis starts in Europe, migrates to Asia, and then comes to the U.S. Are you in agreement with, that's kind of the way the pattern will go? Europe first, Asia second, us last?
Yes, because Europe has had 1, 2, 3 recessions since 2008, and
Yeah.
it's the demographics is it's following Japan. The demographics is very poor. You have these obligations they're trying to meet with a population that is aging rapidly. I mean, all of the developed world faces that.
Yeah.
But yes, and the structural weakness, and now with rising interest rates, it's just going to cause cascading problems. I think we're in the 2007 period to today. Everybody's saying, well, it's a soft landing. Everything
Yeah.
looks okay, but
Yeah.
markets are telling us a story that no, it's not going to be okay next year. So I see the hard landing next year.
Okay, why don't we wrap it with the banking crisis? Everyone's forgotten about what happened to the regionals. The big guys don't look much better. You said that you're short banks. Is that true? Or
Yeah, inverse for clients who
inverse?
want to take that
Yes.
position, who are aggressive. Yes.
So XLF, what's the inverse? What are the inverse bank put ETFs that you buy? What's the name of one?
I don't know that. There's a financial site. It's in Canada. I'm in Canada, remember? So it's an inverse
Okay.
the financial sector.
Okay.
I don't have the name in front. I forget the letter, but we just have Horizons. Those are interested. Horizons have launched a double inversion ETF for Canadian banks. So you can go to Horizons website.
Okay. So
And
here's
if
the
you're an
XL.
aggressive trader, yeah.
All right, I wanted to ask your impression of this. So these are the big guys, the Bank of America's, JP Morgan, which doesn't look so great itself. And they're the so-called beneficiaries of regionals folding, all the money going to the big five. But the charts are pretty similar, except for the magnitude of the decline. Do you believe we're still in a global banking crisis here? And if you think real estate's in trouble, do you think that there might be a rule change about how much money you could withdraw from your account to help stymie rapid withdrawals and putting banks in the same position all the regionals were in?
I would,
Was
yeah, the concern is the story is the leveraged real estate markets in the developed world that are now all rolling over. And that will set off the other crisis in 2024 because it's the leverage and the leverage from the zero bound that every society. So that's
okay.
that's the storm that I see behind us, and we're going to see the crisis enlarge into next year. It's
Okay.
pretty obvious from history that the models, that's what it's telegraphing. It's that it's getting worse, not better. And I follow the top leading indicators in the world, and none of them turned up. Europe has turned down. China, oh, by the way, China's turned down for the first time since really 89, a real recession. They bailed out the world last time. That's
That's
why,
right. You're right.
right? And
Yeah.
and Canada and Australia and China never had a crisis. Our real estate markets kept rising because we were they repowered with a commodities boom. We had interest rates collapse. So that's why Canada looks unscathed as on Australia. It was China that bailed out the world. Now, if they go into a hard landing, Europe, United States, can't, I mean, how do you bail out the system? So these are the indicators I'm looking at.
How about with digital currencies, CBDCs?
I think that they're going to fail in the end. If they try to force it on society, I'm in the belief that it will cause a revolution, a
Amen.
popular uprising, as Bob Hoy says. The public
Okay.
won't accept it.
All right. All right.
Is
Well,
that a nice way of saying it? Popular uprising.
yeah, it's a nice way of saying, you know, have your bunker ready. So just like Yellen's code word for more failures is consolidation. Anyway, John, I'm glad we had a chance to talk, and you survived my grilling, so you're now my trading warrior, brother.
No,
Huh?
no
See,
problem. At least I will be more prepared.
you're
I would
tough.
love to do it again.
You're tough. You showed it, man. You know, I just would love to see the visuals and things that give you this view. And
Sure.
here you can follow next time, and you could go check out John's website. He has services. What do you have? A newsletter, Substack?
Yeah, I'm on the Substack is free articles to educate people, like free. It's just the long way. So I'm
Yeah.
educating individuals, and then the subscription is for people who want access to the model. That's it. It's just a tactical asset allocation model based on what I've learned from Martin Trang. There's nothing genius about it. It's just simply buy low, sell high, and using his phenomenal indicators to allocate. So it's,
Yeah.
and at most you'll be allocating 4 times a year. It's very inactive as possible.
Okay.
Purposely
Yeah.
designed that way.
He
So
has
thank you.
he has different phases of the economy too. Where's he at right now?
Martin Trang,
Yeah.
his models, I've read his stuff lately, and his US models, he's believing that a secular bear in inflation adjusted terms is about to unfold, which
Okay.
is going to favor traders and more active investors than buy and hold.
Oh yeah.
That's his
Okay.
big macro thesis.
Okay. Be tactical.
Yes,
Okay.
tactical, static investing and buy and hold will probably not work in economic winter, but I was surprised with that piece. And you could go to his consulting services, and it's dedicated, directed toward Americans, and specifically the allocation, the bigger pictures, inflation adjusted terms. He sees a sideways movement in prices, for a secular bear. So that means the active investor will be much more successful in preserving and generating wealth into the future.
Okay. Joseph Barbuto,
Yeah.
and you can follow him at the Longwave at the Longwave on Twitter, and check out his website. And really appreciate meeting you, Joseph, and you giving us some of your
Likewise.
time on a Friday afternoon.
Yeah.
And
Thanks.
yeah,
Let's do it
let,
again, and I'll bring the charts on whatever you want. I've got thousands of macro charts, and if you
All
want,
right.
actually, you tell me what you want and tear it apart. I got no problem. I look better.
No,
than
no, I just think a picture speaks 1,000 words. So,
Sure, we'll do
you
that
know,
next time.
visuals.
Promise that.
All right.
Thank
Thank you very much, John Barbuto, everybody. So
you.
have a great weekend, everyone. Could join the team and
Happy Father's Day too, please.
oh yeah, you too, Joseph. Laura's thanking you. People liked our little discussion, our conversation, Joseph. So have a great weekend, everyone. Don't just count your pips, count your blessings. Be back with you Monday. Get some rest. I don't think it's going to be a dull summer. The solstice is next week. And again, happy Father's Day to all the dads out there. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.